You're sitting there. The screen is glowing in front of you. The setup was perfect. You checked the higher time frames, you waited for the pullback, you saw the confirmation candle. You entered the trade, and then, almost immediately, it ticks against you. Your heart rate jumps, just a little. You tell yourself, it's just noise. It's hunting stops, but then it drops again. And again. Now you're halfway to your stop loss. Logic tells you that the trade is invalid. The reason you entered is gone. But you don't sell. In fact, your mouse hovers over the stop loss, and you drag it down. Just a few more pips. Just to give it room to breathe. 2 hours later, you've lost 8% of your account on a trade that was supposed to risk 1%. You stare at the ceiling, swearing at the market makers, swearing at the algorithms, swearing at the news. But here is the brutal truth that nobody wants to hear. The market didn't take your money. The algorithm didn't care about your stop loss. You were not defeated by an external force. You were defeated by the only enemy that has ever truly mattered in this game. Welcome back. Today, we are going to unmask the trader's worst enemy. It is not the hedge funds. It is not the central banks. It is the biological machine between your ears. And if you do not conquer it, you will never, ever be profitable. Let's start with the hardware. To understand why you fail, you have to understand that your brain is defective for the purpose of trading. Your brain evolved over millions of years to survive in the savannah, not to trade the S&P 500. Look at this. This is the amygdala. This is your lizard brain. Its job is to keep you alive. It detects threats. In the wild, a threat is a lion. It's a cliff edge. It's a rival tribe. When the amygdala sees a threat, it triggers the fight or flight response. It floods your body with cortisol and adrenaline. It shuts down the prefrontal cortex. That's the part responsible for logic, math, and long-term planning. Now, here is the tragedy of the trader. To your brain, losing money feels exactly the same as a physical threat to your life. When a trade goes red, your amygdala screams, "We are under attack." It hijacks the control center. You literally become stupid. You lose access to your strategy. You enter fight mode, where you move your stop loss or double down to fight the market. Or you enter freeze mode, where you stare at a losing trade, paralyzed, unable to click the close button until your account is blown. You are trying to play a game of high-level mathematics and probability while your brain is chemically preparing you to punch a tiger. That is why you keep losing. But the biological response is just the foundation. The enemy builds a fortress on top of that, constructed of 3 specific psychological traps. The first trap is the ego investment. Most of us come to trading because we are smart. We've succeeded in business, in school, in sports. We are used to being right. In the real world, if you work harder, you get better results. If you are right more often, you succeed. In trading, the market does not care how smart you are. You can be right on the analysis and wrong on the timing and lose money. You can be wrong on the analysis, get lucky, and make money. The ego cannot handle this. The ego needs to be right. When the market moves against you, the ego whispers, "You aren't wrong. The market is wrong. It has to turn around." If you sell now, you are admitting you made a mistake. So you hold. You turn a trade into an investment. You become a bag holder. You are prioritizing your need to be right over your need to make money. You have to ask yourself a question, and you need to answer it honestly right now. Do you want to be right, or do you want to be rich? Because you rarely get to be both at the same time. The second trap is the sunk cost fallacy. This is the silent killer. Once you have put time, energy, and money into a position, your brain refuses to let it go. You think, "I've already lost $500. I can't close it now. I've come this far." Imagine you are waiting for a bus. You've waited 30 minutes. It hasn't come. You think, "If I walk away now, those 30 minutes were wasted." So you wait another hour. You just wasted 90 minutes because you couldn't let go of the first 30. In trading, this looks like hopium. You are down $1,000. You stare at the chart, looking for any reason to stay in. You switch time frames. You put on a new indicator. You look for news that supports your bias. You are hallucinating a setup to justify the money you've already committed. The market has no memory. It doesn't know you entered at 150. It doesn't care that you are down. The probability of the price going up or down is completely independent of your entry price. But the enemy inside you convinces you that the market owes you a bounce. The third, and perhaps most deceptive trap, is intermittent reinforcement. This is why gambling is addictive. If you touched a hot stove, you would burn your hand, and you would never touch it again. The feedback loop is consistent. Pain equals mistake. But trading is not a stove. Sometimes, you do something stupid, like averaging down on a loser, and the market bounces, and you make a profit. Your brain just learned the wrong lesson. It thinks, holding on to losers is a winning strategy. You feel like a genius. But you just planted a seed of destruction. You will repeat that bad behavior again and again because it worked that one time. Eventually, the market will trend, it won't bounce, and because you learned the wrong habit, you will lose everything. So, how do we defeat this enemy? How do we kill the ego, silence the lizard brain, and overcome these traps? We cannot change our biology, but we can build a cage for it. The solution is mechanical detachment. You need to stop trading in the moment. The moment is where the enemy lives. The moment is where fear and greed live. You need to do all your thinking before the market opens. You need a rigid, mechanical system. A checklist. If A happens, and B happens, I do C. If the price hits X, I exit. No questions. No feelings. No, let's see what happens. When you follow a rule-based system, you are outsourcing the decision-making process from your amygdala to a piece of paper. You are no longer the one deciding to sell. The system is deciding. You are just the employee executing the system's orders. This removes the weight of being wrong. If the trade loses, you didn't fail. The system just experienced a statistical probability. You must also embrace probabilistic thinking. Stop looking at one trade as a measure of your success. One trade is a coin flip. It means nothing. Look at this curve. This represents a series of 100 trades. You will have winners, and you will have losers. Your job is to execute the edge over the series of 100 trades. When you lose, you don't get angry. You just say, that was a cost of doing business. Next, you treat losses like a business owner treats rent. You don't cry when you pay rent. You don't take it personally. It's just an expense required to generate revenue. Here's your challenge for this week. I want you to declare war on the enemy within. I want you to take your next 10 trades with zero emotional attachment to the money. Reduce your size to the point where the money is boring. If you usually trade one lot, trade 0.1 lots. Make it so small that your heart rate doesn't move. Then, execute your plan perfectly. If the plan says exit, you exit. If the plan says hold, you hold. At the end of the week, do not look at your P&L. Look at your execution. Did you defeat the urge to intervene? Did you defeat the need to be right? If you can master yourself, the market becomes an endless ocean of opportunity. If you cannot master yourself, it will be a graveyard. The enemy is in the mirror. Stare him down, take control, and I'll see you on the next candle.